Hello everyone and welcome back to Sudden Wealth. I hope you're having a wonderful end of the weekend and that you're hopefully got some renewed strength for the upcoming week. The year is drawing to its end and I do hope you have some nice programs for the holiday season, that you spend some time with your families, very important as well. And that, also with some friends, and that we all, can relax a little bit from a very strong year for the people who've been following this channel, of course. And what I would like to say, number one, is thank you very much for the 809 subs at the moment. The growth of the channel has been great. I will do kind of a recap video of the first 6 months at the end of December, a bit of the wrap up of 2023 and what I see as going in 2024. But before I start this video, please don't forget to drop that like and subscribe. As you know, is the only thing that really that I really ask, and that I hope that you guys, if you don't mind, if you do enjoy the content, of course. If you don't need to do it. But if you do, if you take some value out of this, just drop that like and subscribe. Maybe spread the message. Who knows? Hopefully this channel will keep on growing with a very good community as it's been so far. So, just a quick recap. Crypto markets are a bit stale at the moment. We are really missing, in my opinion, that big altcoin season, the first one of every cycle. It kind of reminds people of the real potential and life-changing potential of crypto. The bigger ones, safer, blue chip, Ethereum, Bitcoin, blah, blah, blah. We all know those are very good projects. Those will last the test of, they already lasted the test of time. But the smaller altcoins is many times where the excitement is. So we've had some nice runs in certain coins, in certain altcoins. However, we are still to have that really massive altcoin season that tends to come closer to the halving, after Bitcoin pumps in the quarter four of the year prior to the halving, which is this quarter where we are. After Ethereum pumps particularly strong in January and February. I think in February we will be probably above Ethereum 3,200 or so, we'll see. And then the altcoin season kicks in before the sell-off comes with the halving and potentially the spot ETF. This is how I'm seeing the market's moving. Dow Jones already hit a new all-time high. S&P 500 is very close, probably this week. Nasdaq 100 already closed at a new all-time high, but still to make its intraday all-time high, which was close to 17,000. So we are still a bit far away on that, a little bit. We are a couple of 100 points from it. I do think it's going to happen, so stay tuned for that. Now, what I would like to discuss is the reason why everybody is kind of, predicting the Fed cuts. And when you think about Fed cuts, think about other markets as well. You see, one of the issues that the gold bugs have is, of course, they want the destruction of the dollar, right? Because the dollar goes down, which is the big rival of gold, in their view. And but the thing is, the arguments they say, it's because the Fed's going to cut rates. Now, even if the Fed cuts 75 basis points, we are still comparable to where the ECB is right now in Europe. Furthermore, Japan is ridiculously low interest rates, and China is already back to print and quite a bit of money. So they're back to QE and stimulus. Now, this is the funny part, because I predicted this before, which is once they start with QE and money printing, actually that will be deflationary. Say, how can it be deflationary? Say, just look at China. China is back to stimulus, printing a bunch of money, and they are approaching, and in some cases, entering deflation. I really don't understand. I don't know if it's because the economists are based in the US, so they think the US is the only part of the world. I really don't understand. when they say stuff like this, oh, we cannot print money for many years without inflation. See, have you seen Japan? They've been doing it for 30 years. I mean, you already saw an example. Oh, you cannot print money and have lower inflation or deflation. Look at China; it's happening right now. I mean, I don't know if they don't pay attention, if there's a different agenda here that I don't understand. I mean, it can happen. And the reason I've mentioned this before, so I'm not going to go too deep into this, is basically the cost of debt or the cost of financing is a cost for the company. If their cost goes down from 5 to 1%, for example, that means they don't need to pass that cost to the consumer, which is what they're doing right now. Oh yeah, but it's going to be more money in the market, so inflation is going to pop up. No, because 75% live of paycheck to paycheck and are already heavily indebted. So when they go to the bank and say, hey bank, can you give me $500,000? The bank says, no, I'll give it to Bill Gates, I'll give it to Elon Musk. Why? Because they will repay me. But I don't give it to you because you're already so much into debt. I don't even know if you're going to pay me back the other loans that you already have. So that's the point. Unless people are thinking that the Fed, once they start QE and printing money again, they're just going to print money straight to the population like they did during COVID, that will create inflation, for sure. But unless they do that, but at least if you listen to these gold bugs, that's not what they're saying. They're saying just the normal QE, money printing, lowering rates, blah, blah, blah. So no. Now, I've said over the past 3 weeks, that the Russell 2000 should now outperform the other indices. Will we get a new all-time high by Q1 2024? I always said it. To me, that's 50-50. So I'm not going to celebrate if it hits, and I'm not going to celebrate if it doesn't hit. I purposely left it out mostly because of the time frame of Q1 2024. The thing is, the reason why we are even hitting the targets a bit sooner is because the level of participation in the markets, the volumes versus even 5 years ago, the fact that people are a bit more sober now in terms of what to expect in these cycles, and because the money is worth much less, we don't have those major dips that we used to have in the 1920s, where we went down 90%. Those times are finished. And when people say, oh yeah, that means that we have something for nothing. No, we don't. We are losing quality of life. There was a time in America in the 60s where one high school diploma, one person working, good enough for 4 children, 1 house, 1 vacation, and 2 cars. Nowadays, 2 master's degree, both working, small apartment with 2 bedrooms, maybe 1 kid, maybe 2 kids if they go crazy, 1 car, 1 leased car. That's the price we're paying. It's just not, the thing is the principle of the boiling frog, which is our quality of life, and then there's something that distracts you, and actually where the improvement is all coming, which is technology. Technology is indeed much better than the 60s, and it's designed to distract you, keep you busy, keep you occupied, so you don't pay attention to the other side of it. And the point is, the people that were born in that day and age are starting to, unfortunately, pass away. So in a few years, there's not going to be anyone almost that will remember how those days were. And because we are so busy looking at TikToks of somebody doing a stupid dance somewhere else, you're not going to know that your quality of life is decreasing over time. It's a little bit the same with taxation. So the US fought an independence war because Britain was asking 25% tax to the US. 25%. Most people would dream of 25% tax nowadays, but the ancestors in the US actually fought a war for independence because of 25%. But that's the point. You do it incrementally. You take away people's freedom just a little bit. You decrease their average living standard just a little bit every single year, or every single, particularly every single 5 years or so. Then you have a few decades, a few years of a lot of inflation, where you really devalue the currency quite a bit. and you keep the game going forward. That's it. I'm not saying it's good, I'm not saying it's nice. What I'm saying is this is what happens, and will happen once again. Now, what you're seeing right now at this moment is actually exactly what I've been talking about for a few. So you remember that I've said, look, when the rates actually get cut, there is typically a big sell-off for the markets, and that sell-off lasts between 3 and 6 months, which is the time that the money takes to flow into buying these assets once again. Just like the Bitcoin halving, it's the same story. It's a big buy the rumor, sell the news event. What are you hearing right now? Investors are buying stocks to position themselves because of the upcoming rate cuts. Exactly. They are positioning now, they are buying the rumor, but once the rates actually get cut, what do they have to do? Sell the event. Do you think they really, so let's say the Fed's going to talk in April. Let's say that there are some not so nice data in the US economy. Everybody is aware that they're going to cut rates. Do you think that the big money is with a finger like this, waiting for Powell to talk to say, yes, rate cuts 50 basis points, and then they press buy? Or do you think they already bought for a long time, and people like you and me, the retail investors, are waiting for them to, oh, it's going to cut, so it's going to go up. Boom, buy, because they don't understand that the market is looking forward 6 to 9 months. So I think we've covered a few topics here, a bit all over the place, but sometimes, on a nice Sunday, it's nice to go a bit all over the place. But those are things that, and this is the funny part, where so many people get wrong, including all these, freaking economists and financial experts and all of this. And the reason why, for example, CNBC is notorious for being garbage in predictions is because they are the news. So if you buy the rumor and sell the news, you're gonna always go against, or many times gonna go against, what the news report to you. So that's why CNBC, Jim Cramer, Bloomberg, they are all always so wrong, so bad, because they are the news. So if people buy the rumor and sell the news, they are destined to be on the wrong side of that trade more often than not. The last time was in October. Jim Cramer said, I'm not going to touch crypto at all, probably never again, particularly because Bitcoin is going to have a huge sell-off that I predict. That day was the bottom. After that was straight up for Bitcoin. Once again, always wrong. In any case, guys, I think you catch the point of it. Thank you very much. Don't forget, like and subscribe. Drop that notification bell on as well if you will. And I'll catch you in the next one.